Everyone, happy Financially Lit Tuesday. Back at it again. Today, I'm here with a tax topic, right? So, of course, we are in the middle of tax season, this beautiful time of year, one of the best seasons of the year, right? The season where you can get the refund back on all those taxes you paid in the year prior. So, today on Financially Lit Tuesday, we're going to be talking about loopholes, right? But I don't want y'all to just like hear loopholes and go, "Oh yeah, we in there," or hear deductions and go like, "Oh yeah." I want you to really be able to understand the differences between a credit and a deduction, and then we're going to get into some loopholes as well. So, of course, per usual, I'm going to drop y'all some knowledge, take notes, all that good stuff. If you have any questions while I'm speaking, feel free to chime in. Go ahead and hit the share button. Let your peoples know to tune in and comment. Let me know you're watching. Uh, Give me 1 second while I get it popping on here. Hello, hello, hello. I'll see y'all in here. Okay. Hello. Hello, Trey. Okay. Right. 1 second, y'all. Okay, I'm gonna get into this loopholes. 1 second. All right, so the difference between credits and deductions. So and I want to touch on this because, hey Trey, I want to touch on this because a lot of times, we hear, hey, deduct, 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 and we think just because we put it on a tax return to be a deduction that we're gonna get that money back, right? Just because it's a deduction, or just because you have the opportunity to like put it on a Schedule A, which is to itemize your tax return, doesn't mean it's going to be beneficial to you, right? So, so when it comes to deductions affect the taxable income, right? So you can pour a bunch of deductions in. Once your taxable income is at zero, it's at zero. So you putting more deductions on there is not going to change anything, right? But when you have credits work outside of the deduction. So even if your taxable income's zero, but you get a credit, you can have a refundable credit, which, hey, I can still get that credit even if my taxable income's zero. It still gets applied. It comes in my pocket, like the earned income credit, right? But then you have other credits, like a portion of the child tax credit that, hey, even though like my taxable income is zero, but I don't get the full credit because I'm not my taxable income's already at zero. It would help if I wasn't already at zero. So making sure that we understand that. And then I want to also point out that when you're prowling all these deductions, and this is for like my business owners, my contractors, things like that, when you're putting all those deductions on your tax return, you kind of want to look at, hey, am I trying to apply for some loans or funding in the near future? If so, then you want to watch how many deductions and things like that you're pouring onto your tax return. Hey y'all on Instagram. I wish I could see. Hey Tino, what's up? Okay, there you go. Now I can kind of see a little bit. I kind of have it a little propped up. Hey, hello Mahogany. Okay. Oh, I'm trying, y'all. I messed it up. Okay. Hold on, y'all. Okay, hello. So even though you have things that you want to write off on your taxes, sometimes it's not going to be beneficial to you. So you want to only put the things that's going to be in your benefit. That's why I say go to a knowledgeable tax preparer, right? And then you also want to make sure, hey, if you do have deductions and you need to decrease that taxable income, make sure that it gets put on your tax return, right? Okay, so get started on these tax loopholes. Like I said again, if y'all have any questions while I'm speaking, go ahead and put it in the chat, and then go ahead and hit share. Let people know you're watching, all that good stuff, and tell your girl, hey, what's up? All that good stuff. So first thing I'm gonna go the second thing I'm gonna go over is the difference between the different types of taxes. So there are literally probably about 30 different types of taxes, right? You have estate, You have tax while you're living, tax when you die, you have tax when you walk down the street, when you go to the store, um, tax, right? But I'm gonna go over five main ones, like five at the top of the top. Actually, I'm gonna go over four. I don't want to give out everything. It's a lot of information. So first things first is income tax, right? Income tax is one that we're all familiar with. So, of course, we file income tax every year, and that's the tax on the income that you received. So, when you have your W 2 or you're a contractor, any income that you receive, you're going to file income tax. It can be a 1040, which is an individual return. It could be a 1120, which is a corporation return. It could be a 1065, which is a partnership return. So, or a 990, which is a not for profit return. So, those different types of returns, depending on what kind of institution you are, you're going to file an income tax to reflect the income that you earned during the year, right? So that's one of the big taxes. Now, with income tax, you don't just have to pay annually, or it just doesn't happen annually, right? Because technically, for my W-2 people out there, when you're, hey, crown ones, hello. Yeah, so when you don't just have to pay that tax annually. When for my W-2 people, every time you get paid, you're paying money towards your income tax, right? So that at the end of the year, you don't have to pay a bunch of money out for the income that you made during the year. And then if you're a contractor or whatever, sometimes you don't pay those taxes during the year, but they hit you at the end of the year. So you're paying it annually. And then you have quarterly tax payments. Quarterly tax payments help my business owners out there. So to avoid those penalties. So for my business owners or my 1099 contractors, things like that, you want to make sure that you're making those quarterly tax payments. If you don't know how, definitely reach out to Grand Web Financial. We'll be able to assist you. It's very inexpensive to go ahead and book a strategy session. We got you. But that goes into my estimated tax payments, estimated taxes. So that is based on the income that you receive, but you're kind of given a estimated number, right? Based on the income that you receive, the estimated number of how much taxes you would have to pay. So say I receive $10,000, right? I'm gonna be like, hey, I'm gonna go ahead and send them 10% of that, $100, $1,000. So, so I'm gonna go. No, that's 1% is 100. Yeah. So I'm gonna go ahead and send them 10% of that, which is $1,000. Right here you go. I feel like I gotta check my math. But yeah, so you're like, here you go, IRS. Just go ahead and hold on to this money, and then at the end of the year, you're not harassing me about paying $20,000 at the end of the year, right? Third tax is that self-employment tax. A lot of your self-employed people, you get hit with this because you're not paying Social Security and Medicare out of your checks, right? You happen to pay that at the end of the year a lot of the times. So that self-employment tax hits heavy because that's 15%, over 15% of your income that you receive for that year that you have to pay in self-employment tax alone, right? So to kind of bring this number out, you have 6.2% for the employer portion and 6.2% for the employee portion, meaning you're paying a total of 12.4% just for Social Security. And then for Medicare, you're paying 2.9, meaning that's 15.3%. That's over 15% that you're paying to the IRS for self-employment tax. That doesn't even take into consideration income tax. So just to put that out there. I just want y'all to be aware of these tax payments and things like that. Are there ways to decrease these things? Yes, absolutely. Are there should y'all be taking advantage of it? Absolutely. Can y'all? Yes, you can. If you go ahead and reach out to Grand Web, right? So we can go ahead and help you out. Um, oh, here we go. Oh, okay. My apologies, yeah. There we go. Okay. Just had to make sure that was sharing. Okay. Third tax I want to go over is employment tax, which is your FICA, for those people. And those are the taxes that you're paying for my people that have employees, or even for people that are employed. You technically are paying into FICA, which is your Social Security, Medicare. And then for my employers, the unemployment tax, federal and state. So yes, there's a lot of taxes out there. That's why I want to make sure that you have some basis, some information as far as um what taxes are, and then what some loopholes are that you can probably take advantage of as well. Okay, so for my deductions out there, so I'm going to touch on, like I said, 7 deductions and loopholes, things that you could possibly take advantage of. One of the ones I want to go over is the coronavirus, for COVID, right? For those that had COVID during 2019, during 2020, that had to take off from work, or maybe you're an employer and you had to pay your employees because of COVID, and whatever the case may be, there is a reemployment tax credit that you can take advantage of. So there's literally over $13,000 in credits, and that you could possibly take advantage of, that is sitting there really waiting for you as a business owner. Um, so that is one big hitter. So making sure, hey, if you do have if that's the case for you and your business, then go ahead and reach out so we can make sure that that's on your filing, on your tax return. The other is your auto expense. So auto is huge because, who wouldn't like to write off their vehicle? All the miles that we're spending on a vehicle, the wear and tear, the maintenance, the gas, the insurance, lease payments, things like that, right? So when you're writing off auto expense vehicles, honestly, you really want to make sure that the vehicle's under the business's name, right? So that it actually belongs to the business. Or you can have it with some kind of advertisement on the vehicle, or you can have the like I said, the vehicle, basically the business purchased the vehicle. If you are, say, like a contractor and you're driving your vehicle for business, you can also write that off as well. But you want to make sure that you are keeping your books in order, because if anything comes, if anything pops, you know that, hey, I got my ducks in a row. It's cool because Grand Red Financial was doing my bookkeeping. I'm lit. So definitely make sure you are taking advantage of that. Write those things off. So the other I want to touch on is your cell phone, the internet. Those cell phone and internet bills, all of us have it, right? We're all paying internet. We are on our cell phones. Make sure that it's as easy as calling your provider and saying, hey, I want to transfer my phone account into a business account. And they'll have you sign some paperwork, and then boom, now your business is paying the bills for your cell phone. Making sure that you're running that cell phone from the business versus your personal, like, because you're using it for business. Now, if, like, I know people have like different phones, they have multiple phones, one for business, one for personal, things like that. Yeah, go ahead and write off that business phone, right? It's a business expense. So a lot of the times what I find with business owners is, oh, my apologies. Hello, Dust Bunny Cleaning. Hello, thank you for joining in. I'm not even gonna touch that until hopefully that stays. Um, but those cell phone bills. Go ahead. Like I said, it's as easy as calling your cell phone provider saying, "Yo, da da da." Hey, Matthew. And the other is education. For my people that are in school, that or you graduated and you're doing for some form of higher education, or maybe you're taking a course, some continuing education course, or maybe you're like, hey, I want to pick up this trade, or I want to do whatever. I want to learn how to go into real estate investing. I don't know. or stock investing. Maybe you're doing a course. Go ahead and make sure that you're writing those things off as well, because at the end of the day, it's making your business more profitable. It's a business expense, because with those accreditations, with those skills and things like that, you are now able to generate more revenue for the business. You stimulate the economy, all that stuff, grow the business, hire people, the whole nine. So make sure that you're writing those things off. Gifts and charitable donations. Let me make sure. I know I'm rambling. Make sure y'all didn't have any questions and all that. Okay. All right. Okay, we're good. We're good. We're good. Okay. And like I said, if you have any questions, let me know. For gifts and charitable contributions, it can go in both ways. So if you're an individual and you have some charitable contributions, honestly, that will only actually affect you or be in your benefit if you're already itemizing your return, or if your charitable donations exceeded the standard deduction. So if your standard deduction, if you're filing single, your standard deduction is a little over 12 grand. So say you gave away $14,000, or not dollars, but $14,000, and maybe, yeah, in charitable contributions, right? So you're itemized. It makes sense for you to itemize because you're over the standard deduction. Because the standard deduction is 12,000, but you gave away 14,000. So it would work in your best interest to go ahead and itemize. But if you gave away $2,000 and you have no medical expenses or nothing else to itemize on, it wouldn't really work in your interest. To go ahead and put that. Now, if you're a business owner and you gave away to a charitable organization, and you can write those off. You can there's credits for it. You can write it off, things like that. If you need to sponsor an event or maybe an agency because of something, you can write that off as well. Maybe it's promo for the business, whatever the case may be. But include those things on your tax return, especially if you're a business owner, right? And I see y'all out here. How many of y'all are business owners? And what's your business? Matthew, are you still with me? Are you starting a business soon? You gonna join the small business entrepreneur life? Okay. This was a weird delay from when I asked the question from when they writes in. Last. Okay. Last thing I'm gonna go over is payroll expenses. What business? No, I'm asking you. Like, are you going into a business? Like, what's gonna be your venture or your hobby? Can I start? Of course you can start. You can start anytime you want. Um, and if you need to strategize, let me know. We can do a strategy session, come to the table, put some things together, figure out how it's all gonna flow and all that. I know you recently graduated, so you're working your way through the world and the corporate ladder and things like that. But if one day you wake up and you go, you know what, this would be so cool if I would do this on the side. It can start off as a hobby, and then you can take it from there. I don't know what business you should start. What are you into? What are some things that interest you? You could there's a business for literally everything. Like everything. There's like people sell rocks. They customize rocks with messages on them. And people pay like $20, $15, $30 for a freaking rock with a message on it. Hey, whatever floats your boat. But like I said, they polish the rock and stuff, make it pretty. Um, Last thing I said. Okay, it's payroll. So for those people that are W-2, for my individual folks that are W-2 that, are getting paid from your employers, Like I said before, like in numerous lives, the like taxes and tax benefits and things like that are really not for the employees, right? You don't really get any incentives other than paying income tax. You don't get the write-off. You get the itemized, but that's only if you reach a certain like over the standard deduction. And then the things that you can itemize are very limited. But I do have to say, if you did lose money in trading in stocks, you can deduct up to $3,000 of the money that you lost in the stock market. But that's realized lost. That's not, oh, the stock went down and I didn't sell yet. That's realized, like you took out, you pulled out. Let me think on it and I'll get back to you. Okay, Matthew, let me know when you're ready. But yes, for my employers that have employees, yeah, just go ahead and just, go ahead and book a session because there's so many things that you can be taken advantage of as an employer. There's the reemployment tax credit, like I said. There's quite a bunch of different credits as far as the different people that you hire that you can receive credits for, whether they're veterans, if they're low income, if they're uh, if they're Native Americans, different, tax incentives depending on who you hire. So definitely, if you're a business owner with employees, go ahead and reach out and we'll see about that. Cool, cool, cool. But yes, y'all. So I know I'm cutting down the lives a little shorter now going forward because I want to make sure that for the videos that are posted on YouTube, they're not too long. So if you do have missed any of Financially Lit videos in the past, go to Sipping Wealth, sipping like aim, sip some wealth. All that Sipping Wealth channel on YouTube, and you will see literally like 30 episodes. I believe I'm past 30 episodes now. I'm almost at 40 episodes. Like, so this is definitely big, definitely excited. Um, if you have missed any of them, go to Sipping Wealth YouTube channel. Go ahead and subscribe to Sipping Wealth. We're going to be launching out an entire Sipping Wealth platform with different gear and things like that. So stay tuned. Definitely excited for it. And thank you for everyone that joined in tonight. Like I said, it is tax season. If you need tax preparation services, definitely reach out. And then if you have any questions whatsoever on the financial realm, whether it's tax, payroll, bookkeeping, life insurance, budgeting, financial planning, reach out to Grand Rep Financial. And I will see y'all later. See y'all next Tuesday for another Financially Lit Tuesday.